welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup as well as how should you be strategizing your moves for the markets today. Well, as of yesterday, we did show some resilience despite the overall weakness in global cues, US jitters that we saw. The markets did recover from the day's lowest point to all the way up to 22,500 that we saw in the intraday trading session and ended also near the day's high point as well. But the US markets have again seen 2 days in a row of sell-off. Even yesterday, we've seen Dow Jones fall about 500 points on Tuesday, taking the 2-day drop to 1,400 points. S&P 500 is down 0.8% as of overnight. However, the Nasdaq was the outperformer, not falling as much, but it ended about 0.2% lower. But S&P 500, remember, has officially entered the correction territory, meaning a drop of 10% from their peak as well. Leading to this, the Asian markets have also opened flat with the negative bias. Topix has gained about 0.6%. Kospi was up 1%, but the ASX 200 dropped by 1.6%. Nikkei was flat with the negative bias as well, but we'll see the GIFT Nifty futures as we're indicating of a start, just absolutely flat with a positive bias. Let's see how that one goes. Foreign institutional investors, remember, have again been net sellers of the Indian equity markets. 14th straight session is what we've seen, and offloading of 2,823 odd crore rupees from the FIIs as of yesterday. But the DIIs have been net buyers for the 24th consecutive session, buying about 2,001 odd crore rupees worth of stocks in the Indian markets. Now, as of today, of course, these global cues will be important to track. Along with this, India's retail inflation data, which will come up after the market hours, will be important to really see for the month of February. The industrial production figure for January, coupled with, of course, the uncertainty as to how policies around tariffs are going to be shaped up, are going to be extremely important to watch. US President Donald Trump's tariff policies, increasing selling activity by FIIs, they will continue to impact the Indian market sentiments today. Let's welcome our guest on board. We have Mr. Gaurang Shah, Senior Vice President at Geojit Financial Services, now joining in to help us understand how does he see this setup and what does he expect from the markets now. Warm welcome to you, Mr. Shah, and thank you so much for taking the time out. We'll start off with the Trump tariffs and then we'll go forward. Again, we are seeing a lot of to and fro. Within hours of announcing doubling of tariffs for Mexico and Canada, he's retraced back. There is now, his team members are talking about why India is unfairly, putting higher tariffs on alcohol and agri products, about 150% of tariffs, and how they are going to be really taking it more seriously now. What is the sense that you have? How much should a retail investor pay attention to all of these tariff talks on a day-to-day basis that keep changing?
Thank you, Sakshi, and morning to all of you all. So firstly, I think for all those newcomers who came into the market post-COVID 2020, I think for them it has been a difficult time because they have not seen this kind of correction. 21, 22, 23, they saw higher double-digit return. 24, first 9 months, they again saw phenomenal return. And since October last till date, so what in effect I'm trying to say is that, markets are going to be like this. You need to be having elevated risk appetite when you come into the equity market. As far as your question with related to tariff, I have always argued like this, Sakshi, that this is not the first time. We have seen these kind of situations earlier. In fact, when we did the nuclear test, there was a complete ban on us. A lot of, from United Nations, and a lot of countries, stayed away from India. We managed to come out of all those difficult times, right? And I think we are capable of managing this as well. And even anything worse than this also, I think we are well capable of managing all those kind of situations. The only problem is that these kind of news flows make a lot of noise in the immediate short to medium term. So my advice to all the investors is that please avoid all this external noise pollution, as I call it. Focus on the domestic events which are more positive for our economy and our stock market. And my sense is that, I did mention this last time also, that whatever 47th President of United States of America in form of Mr. Donald Trump is doing in terms of tariff, that particular impact on the negative side has also started to reflect on the US stock market and the economy, because you're not going to stay absolutely insulated from these kind of, aftershocks that you love to give to the world. It is going to come back to you also. So there will be a thought process. Sakshi, you cannot have a kind of capacities that the other countries have in terms of exports to US overnight, 3 months, 6 months. They need a lot of time. Point number one. Point number two, the cost of setting up a manufacturing activity or a facility is much, much higher compared to India or Mexico or China or Canada. Point number three, the cost of labor is also going to be equally higher. And point number four, the issues related to the laws and bylaws in the United States. So, for any promoter or any corporate group, they are not going to move things overnight just because Trump has become the 47th president of America, right? And he's going to be there only for some years. He's not going to be there forever. So people will evaluate all these things, and I hope and I pray that all those people with wisdom in Trump's administration put some sense into that guy.
Absolutely. So, investors back home should be really looking at this as noise pollution. Keep an eye out on the long-term growth story of India and continue to focus with those investments that they have put in place for their long-term financial goals and continue to believe in that. I think that's the biggest takeaway. But in any sense, Mr. Shah, do you think the measures being taken in by US could have any recessionary impact on the US economy? Because if that happens, then it's going to be again having some ripple impact across the globe. We are already looking at slowing growth in emerging markets like India. Do you think that could be again further risk at the further risk of downside?
Sakshi, I'm so sorry, but you will have to repeat all over again because large part of your question I had got missed out because your audio had dropped off, so I couldn't hear the question.
Can you hear me now? I wanted to actually ask you any impact of these tariff talks or tariff war, could it lead to recessionary impact in the US economy, and what could be the ripple impact of that?
Well, there have already been talks about it that US might go into recession. Don't know how far because this kind of talks were there even 2 years, 3 years back that US is almost supposed to go into recession, but then it didn't go. Surprise, surprise, right? So I mean, again, whatever President Trump is planning to do in terms of tariff, he's pushed it back twice. Realizing that things are not going to work out the way he wants it to work out. It has going to be both ways. You want to make MAGA, you make MAGA, but then MIGA is also something that India also wants to make it great, right? So I mean, that's the way you have to look at things. You can't be looking at just one side of the coin. So let's hope that it doesn't happen, because if the US goes into recession, then that also will have its impact, and more importantly, it will have impact on the rate cut philosophy that Mr. Powell has spoken to you and me and all of us, and the kind of cuts he wants to do during the year 2025. Inflation and recession are two weird, lethal entities for any kind of thought process over there. So there are talks, but let's hope that US doesn't go that way.
Fair point. Let's come back home and see some of the stocks. Already the pre-open trade has indicated a positive start. Let's look at some of the key stocks. We'll start off with IndusInd Bank, the stock that saw about a 27% cut on an intraday basis yesterday after discrepancies were seen. There's another 10% downtick indication, and the stock is indicating an opening below 600 levels now. This is despite the management really coming out and speaking to the media and saying that they only expect the impact to take place in Q4, and it's not going to be a recurring one. It's a one-time impact. They have been transparent with the stock markets as well, with the kind of gaps that they are seeing with derivatives trading, and they actually believe that the company could continue to be profitable, even in Q4, despite of the impact that they will have to absorb, and of course in the new fiscal year as well. Let's try and understand, Mr. Shah. It's of course about the stock market price. So those that hold the stock at higher levels are definitely worried as to how much more downside from here. What is the kind of impact that they are going to be bracing up for? The other thing is trust also in the bank. What we have seen with several banks in the past, what has happened, but rarely do we see something with a large private sector bank of the size of IndusInd Bank when it comes to any discrepancies or frauds. How are you looking at the scenario unfold, and what would your approach be on this one?
Well, Sakshi, first of all, let me give a disclosure. We have coverage on IndusInd Bank. We are also looking at what has happened in the last 2-3 days. My couple of questions to the management, since they have come out and spoken about their part of justification. Firstly, this is not the first time that IndusInd Bank has been caught on the wrong foot. It has been in the past, not for similar reason, but for other reasons. Point number two, why is it that this lapse happened? What went wrong? And point number three, why didn't the management come upfront, right? Why didn't they come upfront before, the cat was out of the bag? Why didn't the management come and say, in terms of good governance, if they are talking about good governance and faith and trust, why didn't they say it a week back that there is a problem like this? Why is it that the market had to react and then they have to come and give a justification? So it's really a sad part of story, and it's not a small amount. They are saying it will be only felt in the fourth quarter, Sakshi, but if I'm not mistaken, that amount is somewhere close to 1,500 crores. Where on earth are they doing that kind of money? And that will have its impact on the balance sheet, not only for the fourth quarter, but for the coming quarters. So it is very easy to come and say about trust and all that, but my three questions to the management, which I hope they will pay attention to and come out with more detailed clarification. So we are rethinking. It is still evolving, right? There are some justification, counter justifications, etc., coming through. But in this kind of a situation, my sense is that there are better banks to look at, though there are always going to be a lot of question marks, Sakshi. But my sense is that there are better banks to look at given the current situation.
Better banks to look at in the current situation seems that the stock could be opening about 4.5% lower, as is getting settled in the pre-open trade at 626 odd levels. So this will be a very important one to look at again for a follow-up action today after yesterday's sharp 27% loss that we have seen, and the market cap erosion, 19,000 odd crore rupees, of course, given into yesterday's trade as far as investors' wealth is concerned. Let's see how it goes from here. Let's talk about some more important stocks, Mr. Shah. The other one is Bharti Airtel. Of course, this is going to be important because it's going to be tying up with Elon Musk's Starlink, getting those satellite services back home. How does this open up another revenue stream? Does it have a huge impact on the P&L? What exactly should one really understand if somebody is an existing investor of Bharti Airtel or a prospective? And maybe you can also add on Reliance for that matter. What does it mean for Reliance too?
So we've been positive on both largest cellular service provider companies, that is Bharti Airtel and Jio, and of course Reliance, because Jio is a part of Reliance Industries. Now, how this Starship thing is going to work up, that only future can tell us. I can't really comment on what is going to happen because it's going to be futuristic. On the current situation, well, we do have positive coverage, like I mentioned, on both Bharti Airtel and Reliance, Jio, Reliance Industries, that is. Increasing subscriber base, equal number of increasing users as far as data is concerned. Consumption is going up. Last year we saw one tariff hike. Sakshi, this time our understanding is that this year we'll see one more hike in terms of tariffs. And of course, the entire equation in terms of what is going to happen with Elon Musk and Bharti. So let's wait and watch.
Let's wait and watch. Okay. Let's also welcome Mr. Kiran Jani, now Head of Technical Research, Jainam Broking, now joining in on the show. Warm welcome to you, Kiran. Good to have you with us. Tell us what's your sense on the markets. Will we show resilience yet another time despite the weak global cues today?
Very good morning, everyone. So overall, yesterday we have seen after a global cues, we opened with a big gap down. However, approaching at closing time, we recovered from lower leg. Bank Nifty did not recover so much because of the IndusInd Bank weightage and the way IndusInd Bank was down. So looking at Bank Nifty chart, we are a little bit cautious until and unless Bank Nifty is sustaining again above 48,000. So for Bank Nifty is a conditional buy or a conditional accumulation. Once let Bank Nifty to sustain above 48,000. Once it sustain above 48,000, then we can expect the price can again approach to 48,500, 48,600, which is a cluster resistance. And once that cluster resistance cross, we can see some short covering rally towards the 49,500. So as of now, step by step, let's wait for the Bank Nifty to cross 48,000 first. Once that cross, we can go long. Coming to the coming to the Nifty, Nifty has a very good support at 21,200 to 21,300. Any dips yesterday also we have seen market react took that support, and again it closed about 22,500, and today we have to see how it is approaching 22,600, 700. So as of now, Bank Nifty's look very much promising at current market price, or any dips towards 24,400. Keep a strict stop loss of 22,100, and we are expecting price target of 22,800 very soon. So we are very much positive on Nifty, and Bank Nifty is a conditional buy above 48,000.
Okay, fair point. Any two stocks, Kiran, that you can tell us that you're watching out for today, either on the long or the short side?
So long side, we are liking Adani Power. If you look at the Adani Power's price chart at current market price, is giving a rounding bottom pattern breakout on intraday charts. Number one, if you check the daily price chart, there is a rectangle pattern breakout is also visible on daily price chart. So one can look for the Adani Power at current market price. Pre-open, definitely it is showing us gap up, but any dips towards 510, 510, 15, it's the accumulation zone. Keep a strict stop loss below 500, and we can expect price target somewhere around 550, 560 in upcoming time. This is first call. Another call which we are liking is Ambuja Cement. Even a cement sector, you can look around at current market price. From bottom level, it has recovered so much, and the price chart is showing a good strength also. So Ambuja Cement is the another call. It is trading somewhere around 495. You can go long at current market price. Keep a strict stop loss of 480, and we are looking price target of 530, 540 in upcoming time. So both are the short term calls on only for the intraday. Adani Power and Ambuja Cement, both you can go long.
Okay, fair point. So those are the Adani Group stocks that Kiran is really looking at for today. Mr. Shah, I'll come up with another stock that I wanted a view on. Insurance space and PB FinTech. They're investing about 700 crores in PB Healthcare. I'm sure they have already earlier, told about how their intention is to go big on the healthcare pack. Finally, some investments going through. Does it make any key impact on the stock positively?
So I think, if I'm not mistaken, there is a coverage on PB FinTech, Sakshi.
Okay.
There were issues with respect to the competition at an elevated level, but somehow the company is able to survive that. In terms of business outlook, well, that looks extremely robust and strong. So my sense is that news-based, impact could be seen on the stock, but long term, like I said, we have coverage on PB FinTech amongst the FinTech companies that have been hogging the limelight from the market since some time.
Okay, so PB FinTech is something that we can look at. Kiran, we have been actually seeing some bounces as far as the life insurance space is also concerned. HDFC Life, SBI Life, they have been showing us some ticks on the higher side. Does this space overall look interesting to you at this point?
So coming to the cost, SBI Life has given a breakout earlier somewhere around 1480, 1490 level. Somehow stock is not able to sustain above 1550, and it's fall back again below its breakout level. So as of now, we are just having a view of wait and watch on SBI Life. But yesterday we have seen a very good move on HDFC Life. So if you look at the HDFC price chart, stock price is consolidating since last couple of days, and it has given a rectangle pattern breakout yesterday. Also, if you look at the momentum indicator on daily price chart, it is also trading into the bullish zone. So one can definitely go long on HDFC Life at current market price, which is 630, 635. You can keep a strict stop loss below 620, and we can expect price target somewhere around 665, 670 in upcoming time. So definitely one can go long on HDFC Life.
Okay. okay, one can definitely go long on HDFC Live. That's a space that we will be watching out for. We'll wait for the markets to tick. Meanwhile, you can also keep an eye out on several stocks that are in news today, viewers. RVNL, the company's lowest bidder for highway project in Andhra Pradesh for a project worth 554 crores. Keep an eye out on that. Bharti Renewables, its JV has secured a 740 crore rupees solar EPC order for 125 megawatt AC project. So that's another positive. We could look at the stock opening higher in trade. Thomas Cook, the company's announced the launch of a new product called Borderless Travel Card. We'll keep an eye out on that too. Adani Green, the company's commissioned a 250 megawatt solar power project in Andhra Pradesh. Again, something to look at within the Adani Group stocks. We can also look at Godrej Agrovet. The company is going to be acquiring 48% stake in Creamline Dairy for 930 crores. That's another one that we could definitely watch out for. Okay, so the 9:15. Let's quickly look at how the markets are ticking in trade. Let's look at the Nifty, which was indicative of a higher start. Yes, we have a higher start. 22,555 is with us right at the opening tick, 63 points higher. The Nifty Bank also 115 points up. A quarter percent uptick for both these major indices at this point. Let's look at some of the heavyweight counters, how they are reacting to in trade. Let's first look at Reliance Industries, and then we'll also look at some of the heavyweight banking names. IndusInd Bank is something that we will be looking at in trade. Let's pull up all of those stocks in front of you to see how they are trading. Remember, IndusInd Bank was already looking at a start on the lower end. A 5% downtick is what you can spot. 623 at the current realm today. Let's also look at some of the other heavyweight banking names, ICICI, HDFC, and Axis, that we could also look at. A 0.1% uptick for ICICI Bank at 1247 is what we are looking at. Slightly muted start for Axis Bank there. The advances on the Nifty are 1121 to declines of 442. The mid-cap index is in fact better than the benchmarks today, about a 0.5% higher, but IT continues to be on the back foot with basically 1.3% on the lower end as far as the IT stocks are concerned. So again, on a back foot. The small cap index is about 0.5% high in trade, 15,150. That continues to be on a promising note again. So broader markets doing better. The Nifty back about 0.3% now higher in trade. Sensex and the Nifty about 0.2, 0.3% up. Advanced decline ratio is skewed towards the positives with 1120 advances. Sectorally, IT, pharma, and realty seem to be on the back foot, but banks, financials, PSU banks, CPSE index, metal stocks, these seem to be opening higher, as well as the capital goods stocks or the auto pack also. There are some gains that one can really spot. Reliance Industries 1257, 0.8% higher, with Bharti Airtel opening about 2.8% up on the Starlink news right there. So one can actually look at those strong performances that are being seen across Bharti Airtel and Reliance. Kiran, to you, Bharti Airtel, Reliance, what would you do?
If you look at the current market price, definitely Bharti Airtel looks very much promising at current market price. We have seen earlier also Bharti Airtel was defending this level, and after achieving this level, Bharti Airtel has given a very good rally also. Now again, 1700 is acting as a resistance, but looking at the breakout level, any dips towards 1680, 1690 would be the great price to accumulate. No doubt today's gap up opening cannot give you a very good risk reward ratio. So any dips towards 1680, 1670, you can go long, keep a stop loss below 650. And looking at price chart, this time if price is crossing 1700, then we can expect a far better rally. This time on Bharti Airtel towards 2000. So definitely one can buy on dips with the strict stop loss of 650. Coming to the Reliance, Reliance is definitely looks very much promising at current market price. 1200 is very good, lucrative levels at current market price for the investor and for the traders also. One thing is another things on technical basis we can see cup and handle pattern breakout on intraday price chart. Number one, number two on daily price chart it is approaching to 100 days moving average. So if today Reliance is crossing over 1260 and closing, it is considered as a 100 days moving average breakout. After September 2024, the Reliance first time probably crossing is 100 days moving average, which is a very good time based on the technical base. So one can definitely go long on Reliance at current market price or a conditional buy above 1260. Once that price cross, we can expect price target to 1350, 1360 in upcoming time. So for the investment purpose, definitely one can go long on Reliance.
One can definitely go long on Reliance at this point. 1260, it's been consistently, recovering from the lows, and that's what we are seeing take shape. Mr. Shah, I'm coming to you now. Tell us, sir, which are the pockets that are looking attractive to you in this kind of a slight recovery in the markets that's taking shape? I mean, we tested 21,900, and then we are now at 22,500 again. So there's about a 600-point recovery from the recent lows that we've seen already. If this were to stay and to improve from here, which are the pockets that you believe will drive the recovery?
Well, so first of all, I hope the recovery stays this way and we don't again succumb under selling pressure. But the
Yeah.
good part is that the sell side number from the FIs have been on the lower side, so that's a sign of relief. Having said that, I think we soon will be seeing a curtain raiser for the fourth quarter, last
Yes.
and final this financial year. And if I don't have to look at the immediate short to medium term, and if I have to take long term into consideration, then banking, autos, cement, cap goods engineering, defense, power. These are going to be the five primary sectors that I look at, then followed by, of course, FMCG and hospitality sector would be the preferred. And I would also mention, Sakshi, that look at large cap and then select
Yes.
mid cap.
First, look at large caps and then look at the mid caps at this point. You did take the name of FMCG, sir. How are you approaching this space? I mean, we're about, 15 days away from the 1st of April when finally the budget announcements will start to kick in, the tax cut bonanza, which we are expecting to give a lot of fillip to the consumption story. So, how should one start to plan their investments? It will not happen immediately, but gradually one can start planning the impact that they could bet big on.
So our sense is that third quarter, new financial year, that is October, November, December, thereabouts, you might see the actual ground level consumption pick up. And that will not be limited to FMCG, but it will also slip on to your discretionary names, uh, like consumer durables, white good appliances, entry level two wheelers, cars, and of course, jewelry stocks.
Yes.
So that's the view, and of course on the FMCG side, I think not only the 12 lakh bracket, 12.175 lakh bracket, but also the steps that and initiatives that have been taken by the government to increase the income levels for semi-urban and rural India as far as the agrarian economy is concerned, Sakshi. So you will have a much better support on the volume side coming in from semi-urban rural India as well.
Fair point. We'll also look at some of the stocks which are reacting sharply today. I wanted to check Kaynes Technology once and show that to all our viewers. 8.7% lower. There's a sharp fall, and this is right after the company's MD, Managing Director, has got a show cause notice from SEBI. The MD is Mr. Ramesh Kuhikan, and he's got a show cause notice from SEBI, and that's why you see a sharp cut on Kaynes Technologies, almost 9% of a fall in trade today. And this is as far as the structured digital database is concerned that he's got the show cause notice for. We'll have to look at some of the details there, but the stock is already reacting on the negative side. Mr. Shah, of late, both Dixon and Kaynes, the EMS plays have consolidated quite a bit from their highs. We do understand, the valuations had run up quite sharply in the previous run up in the markets. How are you looking at these two? Because again, they have those niche plays that continues to support the, stock prices or the sentiments around this space. But do you think they are in a fair value that can be looked at now?
Well, so I won't straight away give buy, sell, and hold on Kaynes, Dixon, or as a matter of fact, PG Electroplast.
Mm-hmm.
These themes and stories, not very long ago, Sakshi, were running away at all cylinders fired, thanks to the EMS electronic manufacturing side, PLI scheme, and of course the support from the government to reduce the dependency and reliance on Taiwan and China as far as India's imports for chips and semiconductors or electronics, as a matter of fact, is concerned. They have corrected quite sharply. Since we don't have a coverage, it won't be prudent on my part to give a buy sell role. But this is an interesting sector from a long term point of view.
Okay. Kiran, coming back to you, anything that you spotted in the opening in terms of key stocks that one can look at?
So Asian Paint looks good at current market price. One can think about the Asian Paint. It is trading near a very strong support of 2280, 2270. No doubt trading at day's low, but one can look at on Asian Paint at current market price. As Gaurang sir also mentioned that one can definitely look for the large cap. And Asian Paint being underperformed since long time, one can look at current market price. Any dips towards 2060, 2070 is also a very good buy for the Asian Paint. One can keep a very strict stop loss below 2050. If 2050 is not breaking down, then you can expect price target of 24, 2500 in upcoming time. So for the investment perspective, definitely Asian Paint looks very good at current market price.
Okay, Asian Paints looks very good at this point in time. In fact, that's a good point to discuss with Mr. Shah as well. With the crude oil prices falling consistently, sir, how are you looking at this erstwhile, painful space of paints, especially with Asian paints? What we've seen has been happening because of the heat of competition or, the headwinds of input prices. How the year has largely been a washout in terms of earnings for the large players like Asian Paints after the consolidation correction has played out. How would you approach this space now that the input costs are turning favorable for this space?
So consolidation and correction, along with that competition, as we all know, was at an elevated level. There is one more company which has shown interest to come into this sector. But there is enough place, Sakshi. There is enough for many players to coexist together.
Okay.
In paint specifically, there was a disaster in terms of number. First quarter, second quarter, third quarter. Hope the correction in crude oil brings in a little bit of respite. We have coverage on Asian Paints, Berger Paints, Kansai Narrow. It's a proxy play to real estate sector doing well as well. And home decor every 5-6 years, changing the shades and the colors in our rooms, walls,
Yes.
also augurs well. So sense is that numbers will speak for itself. Well, crude oil coming down will not only be the only factor, Sakshi. I think they have to regain the lost mojo, especially for Asian Paints.
Okay, fair point. Let's look at some of the other pockets. Well, of course, we'll have to look at the large caps within the banks. HDFC Bank is actually doing very well today. About 1700 odd levels is what we can see. Strong move on the higher side after a long haul can be seen on this one. It's now at the day's high, 1.5% higher. So the banking space is showing up, some moves on the positive side. Apart from this, Mr. Shah, I wanted to also discuss with you the PSU banking story as well. How are you looking at the recovery taking shape here? Does that interest you to put in fresh funds within the PSU banks as well?
So one of the sectors that I highlighted earlier during our conversation, banking and finance. So banking will be definitely there, and in that public sector banks, they have done well, reasonably well. I don't think we have to write them off. Numbers were good enough for the second quarter, third quarter, fourth quarter, like I just mentioned. Possibly 10th or 15th of April, we'll see a curtain raiser for the fourth quarter. Likely to do well. Interest rates headed down south. Loan book growth headed up south, up north. Gross and net NPA is doing well. MFI segment is the only joker in the pack, but that will also get resolved, I guess. So we like State Bank of India, Bank of Baroda, Bank of India, PNB, Indian Bank, Canara Bank. These are the names on which we have fundamental coverage from a long-term point of view.
Okay, wonderful. Well, on that note, thank you so much, Mr. Shah, for being with us on this special edition. It's always a pleasure to speak to you and seek some wonderful insights that you have to share with all our viewers always. I hope you have a fantastic time till the time we see you next, sir.
Thank you. All the best, Sakshi. Thank you so much.
Thank you so much. Well, viewers, we'll continue our conversation with Kiran now, and we'll try to spot some stocks there. There is some kind of a dip you are seeing on the Nifty after the first about near 13 minutes of trade. So the Nifty has slipped now below 22,500. We've come down and 0.1% of a loss can be seen on the Nifty. Now, when we look at the key contributing factors, we are at 22,465. Even though we pointed that HDFC Bank is contributing on the higher side, it's the top contributor with 34% on the 34 points on the gaining side. It's Infosys that's declining, TCS that's declining, HCL Tech that's declining, Wipro that's declining. So IT pack continues to be under pressure. Kiran, how would you assess first up the IT stocks and the pain that continues here?
So looking at IT stocks, definitely you can expect some more price corrections. There are two different ways to look into that. Number one is the US tariff war and everything is there, of course. But you can also look at the tailwinds of the USD INR. Now USD INR is also appreciating. I mean, INR is appreciating, so that is a negative for the any export oriented company. So there is a one thing. Another thing is that technically, if you look, there is a big breakdown on Nifty IT. Nifty IT has a very good support of 38,500 level. Now that 38,500 level is broken down with the gap down opening number one. It retested again, but again it was failed to sustain about 38,500. So there are chances we can see this corrections to keep continue towards 35,000, 35,500 level. So we are not expecting any kind of a bottom fishing on Nifty IT. We are just suggesting our client to stay away. And because IT is going down, there are very high chances we can see some recovery on banks.
Okay, got that. So let's play the banks now. Which are your favorite banks at this point in time? Where would you put in your fresh funds?
So on banking side, if I look at the our fresh buying, definitely the PSU side, we are liking SBI Bank. So look at the SBI Bank, there are definitely a very good level, somewhere around 700. And at current market price, you can see a good bounce back from lower level, number one. Number two, we can also see inverted head and shoulder pattern forming on daily price chart. So one can go long on HDFC SBI Bank at current market price, keep a very strict stop loss below 700 and looking at the price chart, we can expect at least 780, 800 in upcoming time. So SBI is our preferred pick. Now coming to the HDFC, I already spoken about, the stock price has given a breakout from 48 months of consolidation. It will take some time, but I think 2025 is for the private bank. And one of the bank is HDFC Bank at current market price. You can go long any dips towards 1670, 1680 is a very good support. Keep a strict stop loss of 1630, 1620, and you can go long. We can expect price target of 2000 by this year end for sure. So for disclaimer point of view also, we have recommended our clients to go long on HDFC. One more private bank which we are liking, that is a Kotak Bank. So Kotak Bank also has a very steep resistance of 1900. Now it is sustaining over a month on above the 1900. So we are expecting a far better move on Kotak Bank. It has given a multiple fake breakout of inverted head and shoulder, but this time again we are hoping that this inverted head and shoulder won't get fail, and we can expect some good price amount of target on it, Kotak Bank. So one can go long on Kotak Bank at current market price or any dips towards 1950, 1940. Keep strict stop loss below 1900 and we can expect price target of 22, 2500 by this year end. So we are very much bullish on HDFC and Kotak Bank for this year.
Okay, fair point. So that's the view that's coming in on the banking space at large. But let's also look at some other counters. On the positive side on the Nifty, there's also a contribution coming in from Tata Motors today, about 10 points on the higher side. Tata Motors has been a big laggard, and investors have been feeling stuck in this stock because the stock has come off nearly about 50% from its highs. 40-50% from its highs. What would you say on Tata Motors, the 2.5% uptick? Does it show any kind of signs of reversal?
So looking, if we discuss about Tata Motor has corrected from 1200 level to 600 level. So almost a 50% correction has been happened. And since 700 level, everyone is wanting to do bottom fishing on Tata Motor, but somehow it is not giving any kind of a positive sign. Earlier, it has also formed rounding bottom pattern somewhere around 800, but again, it's went fail and dip down to 600. But at current market price, we can see Morningstar candlesticks pattern number one. On daily price chart, we can see cup and handle pattern. And now again on daily price chart, we can see prices is giving a crossover above its 20 days moving average today. So there is a hope of rate definitely. So one can go long on Tata Motor. It's a bit risky bet. Keep a strict stop loss below 630. If 630 is not broken down, then you can expect price target of 720, 750 upcoming time. So definitely one can go long, but keep a very strict stop loss below 650.
Okay, fair point. I hope that's also given you an understanding as to how should you be really looking at Tata Motors. The Nifty, remember viewers, is down. It's off the day's high point, 22,469. There's a dip of now 0.5% from the highs of the day, about 0.4% or so. And the Sensex also on a similar note. There is a Nifty Bank correction from the highs as well, about 0.2% odd. But the Nifty Bank is kind of recovering now, about 0.5% higher in trade. Mid caps having that slipped in trade now, 48,700. So the mid caps is where the problem is emerging again. Let's discuss this space, Kiran. Whenever there is a market dip, we are actually seeing the broader markets give up, give into sharper gains and give into sharper, losses as well. How are you really looking at the mid and the small caps at this point in time? Do you think, despite the correction of over 20% in both mid and small caps from the highs, there is much more downside or pain that one could see from here on also?
I just wanted to take some more time to answer this
Sure.
question. Number
Absolutely.
one, if you look at the factor analysis from the COVID low, this is same thing happened during 2013, 2014. So from 2013, 2014, market has given a one-way rally from 6,000 to 9,000. And during that, market also retraced 50% also. But let's not discuss on that. But the main point is that when 2017, 2018 market was somewhere around 9,000, percentage wise, Nifty has given a 100% kind of a return, but mid cap and small cap given a return of 250, 300%. Now, similar thing we can see from COVID low. From COVID low to when the Nifty made 26,000 high, Nifty has given a return of 100%, 120%. But if you look at the mid cap and small cap, again they have delivered return over 200%, 250%. So there is a big divergence between the small cap and mid cap. Now, generally, this anomaly has to be recovered again. So that is the only reason we can see from September or from October month this correction has been started, and looking from that level we can see some of the mid cap and small cap corrected over 50%, 80% kind of a level from those top level. Now, index wise, again, you can see the return divergence from 120 to 250. It's become narrowing down to 100% to 160, 170%. So we are not expecting further correction on mid cap and small cap. Definitely a stock specific correction can continue, but broader picture is looking stable as of now. We are expecting market to bottom out at this level only. But stock specific, we are looking a very much promising level on large cap. So we are asking our client also to restructure their portfolio, give some more weightage to large cap company and then the mid cap and small cap. So from current level, if I discuss about the Nifty, if you check from March 2023 to September 2024, when Nifty from 17,000 to 26,000, if you mark the Fibonacci retracement, 38.2% retracement is 22,100. So we are expecting market to bottom out between 22,100 to 21,800. And from this level, for this year, we are expecting market won't break below 21,800, and we are expecting price target of 24,000, 25,000 by this year end. So we are not expecting a new all-time high this year, but we are at bare minimum level of the market. We are not expecting further correction on even mid cap and small cap. Time correction will continue.
Time correction will continue. We are unlikely to see newer highs, but we can definitely climb up to 25,000 odd levels on the Nifty by the year end. This is where the bottom could be in place around 21,800 or so, and the markets could inch higher from here slowly and gradually, and things could shape up positively. Large caps first, and then look at the mid and the small caps is what Kiran believes should be the strategy for investors in this current market. Okay. Let's also look at some of the other pockets then. Kiran, let's discuss some of the other stocks. HDFC Bank is something that I wanted to discuss. Today there is a sharp improvement that has improved the Nifty also from the day's low point as well. What exactly is your sense on HDFC Bank today?
So HDFC Bank, as we discussed, we have a preferred peak for this year. So long-term perspective, definitely we can go long. For intraday perspective, it is taking a support of 200 days moving average since last couple of days, despite the fact that Bank Nifty is trading with big gap down, or there are some negative news for the IndusInd Bank also. So yeah, the heavy weightage is into the play. It is holding the market also. So looking at current market price for the intraday perspective, anyone can go long at current market price when it dips towards 1700. You can keep a strict stop loss below 1680, and we can expect price target of 1740, 1715 upcoming time. So definitely one can go long on HDFC Bank.
Let's again pull up IndusInd Bank as well, viewers. The stock has turned green. 661, almost a percent higher in trade now for IndusInd Bank after those sharp losses of yesterday. In fact, now 2.2% higher. It's at the day's high at 670 now. Kiran, how would you look at IndusInd Bank? The worst behind. Should one really look at this as an opportunity?
So looking at IndusInd Bank current market price, definitely everyone wants to catch this falling knife, but
Yep.
again we would ask to stay away because as Gaurang sir also said, whatever the damage has happened, management should
Yep.
come first and then tell, rather than the news come and then management come for the clarification. So that is there as in fundamental values and the corporate governance. But coming to the technical part also, if you look at the weekly chart or monthly chart, we are not seeing any kind of a such support at current market price. So either we want either we would like to wait and watch only for this particular stock and we will not enter at current market price. And if anyone wants to go long, technical says you can go only long once the stock price is crossing 750 level. So either we will wait for some more days on daily price chart, let the bottom out the stock, give us any particular good sign based on the price chart. But as of now, prices is not giving any kind of a such sign which which can help us to go long. So at current market price or at current state, we would like to avoid this stock or wait and watch.
Wait and watch or avoid the stock at this point in time. Okay. First about 25 minutes out on the trade. Kiran, anything else that catches your attention in the markets? Where should one really look at for maybe stock specific opportunities for today?
So stock specific opportunity, we are liking chemical stock. We are already suggested to our client to go long since since from 2 days. Sorry. So graphite and HEG looks very much promising at current market
Okay.
price. You can look at the HEG and graphite, both are forming the same pattern, rounding bottom pattern on daily price chart. Both are up by 1 or 2%. So let's not chase this particular stock, but any dips towards 430, 420 for graphite, you can go long, keep a strict stop loss below 400, and we are expecting price target of 500 odds on very short time. So graphite looks very much promising. Another stock is HEG. HEG is also looking very much good at current market price, double bottom pattern breakout, rounding bottom pattern breakout. So one can go long on HEG also at current market price. We are looking price target of 500 very soon on HEG. So HEG and graphite looks very much promising at current market price.
Okay, HEG and graphite is something that we can look at. Let's look at the Nifty 500 basket as well to see where else are we looking at for some gains. Raymond has recovered today, 3% higher. NLC India is up. You have HPCL that's again up in trade. Balrampur Chini, TTML. These are some of the stocks. Data Patterns, AB Capital, Lemon Tree Hotels, DB Realty. That's also up and about. Kiran, do you think the real estate space will have more value after yesterday's about 4% up move that we saw on this one? Anything to really look at in these bounces on the real estate pack?
So in real estate space, we are liking DLF. So looking at current market price or DLF on daily price chart, stock price is forming a double bottom pattern breakout, and the double bottom neckline is somewhere around 680 only. So it is trading at breakout level only. So one can go long at current market price, keep a strict stop loss below 650. And if looking at this double bottom pattern, we can expect price target of 730, 750 in upcoming time. So DLF looks very much promising. Another stock is Oberoi Realty is also very good at current market price. The similar pattern on Oberoi Reality also from top 2300 level to 1400, the stock price has given a breakdown, and now both stock, I mean DLF also we discuss in Oberoi, both are forming a double bottom pattern. So definitely one can go long on Oberoi Reality at current market price, keep a stick stop loss below 1500, and we can expect price target of 1900 very soon. So DLF and Oberoi Reality both are looking good.
Okay, so that's as far as the real estate space is concerned. But just like how Kiran said that in case it is going to be on the back foot, he expects banks to take the front row. The Nifty Bank is recovering sharply, and you can actually see 48,200 now on the Nifty Bank as well. About a 0.7% of an uptick is what we've already seen. So it's at the day's high point. Of course, largely this has to do with the contribution that's coming in from HDFC Bank and Kotak Mahindra Bank as well. But even the PSUs are pulling up. You have SBI that's also improving in trade. Banks, financial services also, Bajaj Finance contributing on the positive side, Shriram Finance contributing on the positive side as well. Kiran, beyond the private sector banks, within NBFCs and PSU banks, where would you place your fresh bets?
So PSU we discussed about SBI. Now I want to highlight NBFC counter. So Bajaj Finserv and Bajaj Finance has given a far better rally. So I don't want to chase this particular stock. So there are two more stock. One you already highlight, that is the Shriram Finance. If you look at the Shriram Finance price chart, we are tracking this stock and we are recommending to our client from 600 level, from 600 to now it is 640. The fresh breakout of cup and handle pattern is coming out. So one can go long at current market price aggressively, keep a strict stop loss of 620, and we can expect price target of 700 plus for sure. So definitely Shriram Finance one can go long at current market price. One more stock from NBFC which we are liking, there is Cholamandalam Investment Finance. If you look at the daily price chart, it has given a breakout from triple bottom pattern breakout from 1300 level, from 1300 to 1450, 1440 its current market price. So here also it has consolidated for a while. Now again, it is starting for the new run. So at current market price, one can go on Cholamandalam. No doubt today is trading at day's low, but at current market price or any dips towards 1420, 1430 would be the a good buy for the Cholamandalam. Keep a stop loss below 1400 and we can expect price target of 1600 very soon. So Cholamandalam and Shriram both can go long.
Okay, fair point. So we are looking at this space of NBFC banks, financials continuing to be the front runners today. Apart from this, within the PSU space largely, I wanted to also discuss the OMCs, HPCL, BPCL, IOC. All three of them are up and about yet again today. Like I pointed out, crude oil prices falling, and that's been a positive trigger for the last few days for the space. Kiran, are you still confident of placing fresh bets here on HPCL, BPCL, IOC, looking at how the crude oil prices are moving?
So commodity plays is very difficult and the volatility will be higher. But looking at the technical setup, BPCL looks very much promising. Inverted head and shoulder pattern breakout we can see on BPCL at current market price. Also, stock price is crossing its 50 days moving average after October 2024. So there are two technical sign we are seeing on BPCL at current market price. So definitely BPCL you can go long at current market price. Keep a strict stop loss below 250. And stock price is not breaking below 250, you can expect price target of 320, 330 in upcoming time. So BPCL you can go long.
BPCL, we can definitely go long. Okay, Kiran, then we'll thank you on that note for being with us in the morning edition and sharing with us all those stock strategies and overall market overview that you've shared. Always a pleasure to have you with us. Let's start wrapping up the morning trading session. And we'll have you back very, very soon, Kiran, to speak more about the market outlook going forward soon on Business Today. Thank you so much. Viewers, we'll start wrapping up the trade. 22,473 now, 0.1% lower for the Nifty. You can see a 26-point dip on the Nifty, but the HDFC Bank counter, which is pulling up the Nifty Bank, is something to really look at. It's the banks and the financials that are taking the front row today. 1.4% higher for HDFC Bank, above 1709 odd levels, and the Nifty Bank seeing almost a 300 point of a jump, and that's what is pulling up the space. IndusInd Bank, keep an eye out on it. There's a sharp recovery from the losses, 3.5% up now, almost 4% higher. From the day's low is what you're seeing IndusInd Bank at. So recovery taking shape. Probably the stock is taking heart from the fact that the management has come out and said that they are going to be seeing an impact only for this quarter and the profitability will continue going forward, and they are taking cognizance of whatever measures they have to take to curb any kind of losses going forward on account of discrepancies. With that, we wrap up this special edition. Stay tuned with us on Business Today Television. We have a lot of exciting coverage, interesting conversations going in forward from here. So stay tuned. There's a lot more coming in on your screens on Business Today Television. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that addresses all your stock-specific queries. In case you're watching this show for the first time, well, a WhatsApp number will be flashing on your screens. This is where you can send in